There's a building in Georgetown, Cayman Islands. It is called Ugland House, 5 stories tall, plain white exterior, unremarkable architecture. Nothing about it suggests importance. And yet, as of the most recent corporate filings, more than 18,000 companies are registered at this single address. 18,000 companies in a 5-story building. How does that work? How do you fit 18,000 companies into a structure that could barely hold 300 people? The answer is simple. You do not. Because those companies are not real. They do not have offices. They do not have employees. They do not manufacture products or provide services. They are legal fictions, shell entities, pieces of paper filed with the Cayman Islands Corporate Registry for one purpose and one purpose only, to make money invisible. This is not a tourist resort. This is not a tropical paradise where wealthy people relax on beaches. This is the black box of global finance, the place where trillions of dollars disappear from the tax systems of every major economy on Earth. And the system that makes this possible was not created by accident. It was designed deliberately by a handful of lawyers in the 1960s who understood that in the modern world, money does not need to physically move to a tax haven. It just needs to legally exist there. By the end of this video, you will understand how a mosquito-infested swamp became the most powerful financial center in the Western Hemisphere, why the ultra-wealthy pay almost no taxes while you pay 30% of your income, and how a single piece of legislation written in 1966 created a parallel financial universe where the rules that apply to you simply do not exist. Let me take you back to the Cayman Islands in 1960. This is not the Cayman you see in vacation brochures today. There are no luxury resorts, no international banks, no glass towers overlooking turquoise water. The islands are a British colonial backwater. The population is around 8,000 people. Most of them are fishermen. There is no airport, no paved roads. Electricity is sporadic. And the most common complaint from anyone who visits is the mosquitoes, swarms of them. The islands are hot, humid, and economically irrelevant. But something is about to change, and it starts with decolonization. In the 1960s, the British Empire is collapsing. Colonies across the Caribbean are demanding independence. Jamaica gains independence in 1962. Trinidad follows in 1962. Barbados in 1966. The Cayman Islands are administratively tied to Jamaica. When Jamaica separates from Britain, the Caymans are given a choice. Go independent with Jamaica, or remain a British overseas territory. They choose to stay with Britain, and the reason has nothing to do with loyalty to the crown. It has everything to do with legal infrastructure. Remaining tied to Britain means Cayman corporate law is backed by British courts. It means contracts signed in the Caymans are enforceable in London. It means the islands can offer legal certainty in a region where newly independent nations are politically unstable. This is not patriotism, this is business strategy. And a few very smart lawyers recognize the opportunity immediately. In the mid-1960s, a small group of Canadian and British attorneys arrive in the Cayman Islands. They are not there for vacation, they are there to build something. These men understand tax law, they understand corporate structures, and they understand that the world is about to enter an era of global capital mobility. Money is becoming electronic, corporations are becoming multinational, and the old systems of taxation, which rely on physical presence and national borders, are about to become obsolete. So they write a law, and that law changes everything. In 1966, the Cayman Islands Legislative Assembly passes the Banks and Trust Companies Law. On the surface, it looks like a simple regulatory framework. It allows foreign banks to operate in the islands under minimal oversight, but buried in the text is a provision that makes the Caymans fundamentally different from every other jurisdiction on Earth. The law does not just reduce taxes, it eliminates them. There is no corporate income tax, no capital gains tax, no inheritance tax, no withholding tax on dividends or interest. And most importantly, there is complete financial secrecy. The identities of corporate owners, the details of transactions, the flow of funds, all of it is protected by law. Disclosing client information becomes a criminal offense punishable by imprisonment. This is not a tax reduction. This is the creation of a tax-free zone. And unlike other tax havens that existed at the time, Switzerland, for example, the Caymans do not require you to physically move your money there. You do not need a briefcase full of cash. You do not need to fly to the islands and open an account in person. You just need a lawyer to file paperwork. And suddenly, your income is no longer taxable in New York, London, or Tokyo. It is taxable in the Caymans, where the tax rate is 0. The mechanism is elegant, and it works like this. Imagine you are a multinational corporation. Let us say you manufacture smartphones in China, sell them in the United States, and generate $10 billion in profit. Under normal circumstances, you would owe corporate taxes in the United States, roughly 21%. That is $2.1 billion going to the IRS. But here is what you do instead. You create a subsidiary company in the Cayman Islands. This company does not manufacture anything, it does not sell anything, It is a shell, a legal entity that exists only on paper, and you assign the intellectual property rights for your smartphone designs to this Cayman entity. The patents, the trademarks, the software. All of it is now legally owned by a company registered at Ugland House. Now, when your Chinese factory manufactures a phone and your American stores sell it, the U.S. company pays a licensing fee to the Cayman subsidiary for the right to use those patents. That licensing fee is structured to be exactly equal to the profit your U.S. operations generate. So, on paper, your American division makes zero profit. It pays all of its revenue to the Cayman company as a licensing expense. In the United States, that payment is tax deductible. It is a business expense. Your taxable income in the U.S. is now zero. And in the Cayman Islands, that same payment is recorded as income. But the Cayman corporate tax rate is zero, so you owe nothing there either. You have just moved $10 billion in profit from a jurisdiction with a 21% tax rate to a jurisdiction with a 0% tax rate. Legally, without breaking a single law, and the money never physically moved anywhere. It is just an accounting entry, a number in a ledger. This is how Apple holds hundreds of billions of dollars offshore. This is how Google, Amazon, Facebook, and every other tech giant structures their operations. The products are designed in California, manufactured in Asia, sold globally. But the profits are legally earned by a shell company in the Caymans that has no employees, no office, and no operations. Just a mailing address at Ugland House. And this is not limited to corporations. Individual billionaires use the exact same system. It is called buy, borrow, die. And it works like this. Step 1. Buy assets. Stocks, real estate, businesses. Anything that appreciates in value over time. Step 2. Do not sell those assets. If you sell, you realize a capital gain. And capital gains are taxable. So instead, you borrow against the value of those assets. Banks will lend you money using your stock portfolio as collateral. You get cash to spend, but it is not income. It is a loan. Loans are not taxable. Step 3, die. When you die, your heirs inherit the assets. And under current U.S. tax law, inherited assets get a stepped-up basis. That means the capital gains that accumulated during your lifetime are erased. Your heirs can sell the assets and pay zero taxes on the appreciation that occurred before they inherited them. So you live off borrowed money, you never pay income tax because you never sell. And when you die, the tax obligation disappears. The loans get repaid from the estate, and the wealth transfers to the next generation completely tax-free. Now combine that strategy with offshore accounts. Instead of borrowing from a U.S. bank, you borrow from a Cayman bank that you own through a shell company. The loan terms are whatever you want them to be. The interest rate can be zero. The repayment schedule can be indefinite. And because it is structured as a loan, there is no taxable event, ever. This is how the ultra-wealthy operate. And it is completely legal, because the laws were written to allow it. Now let me show you the numbers. Because this is not a small-scale problem, this is systemic. According to estimates from the Tax Justice Network, approximately 10% of global GDP is held in offshore accounts. That is roughly $8.7 trillion, hidden in jurisdictions like the Cayman Islands, Bermuda, the British Virgin Islands, and Panama. Money that generates returns but pays no taxes. Money that funds schools nowhere, builds roads nowhere, and contributes to public services nowhere. In the United States, the top 1% of earners pay an effective tax rate of around 26% when you include income, payroll, and state taxes. But the top 0.1%, the billionaires, the people wealthy enough to use offshore structures, pay closer to 3%. Some years they pay nothing. Jeff Bezos reported zero federal income tax in 2007 and 2011. Elon Musk paid zero federal income tax in 2018. Not because they cheated, because the system allows it. Meanwhile, a teacher earning $50,000 per year pays approximately 30% of their income in combined taxes. A construction worker, a nurse, a small business owner, anyone whose wealth is tied to their labor and cannot be offshored. They pay the full statutory rate, every paycheck, every year. This is not a bug. This is the design. The tax system was built to tax income from labor, not wealth, not capital. The people who control capital can move it anywhere. The people who earn wages cannot. There is a historical parallel for this, and it involves another tiny jurisdiction that operated outside the rules of surrounding nations, the Vatican. For decades, the Vatican Bank, officially called the Institute for the Works of Religion, operated with complete secrecy. It was not subject to Italian banking regulations. It did not report to Italian tax authorities. It was a sovereign entity, immune from oversight. And for years it was used by wealthy Italians to move money offshore, evade taxes, and launder funds. The Italian police could not investigate. The Italian government could not audit. The Vatican was untouchable. The Cayman Islands function the same way. They are a British overseas territory, but they operate independently. The IRS cannot subpoena Cayman banks. The European Union cannot force the islands to disclose account holders. The islands are legally sovereign in matters of finance, and that sovereignty is protected by Britain, which has no incentive to shut down a system that benefits London's financial district. This is why Ugland House exists. It is not a building. It is a jurisdiction, a legal space where the normal rules do not apply. And the people who use it are not criminals. They're following the law that was written specifically to let them avoid taxes while ordinary workers cannot. So what does this mean for you? It means that every time you look at your paycheck and see 30% taken for taxes, you're funding a system that the ultra-wealthy do not participate in. You're paying for roads they do not drive on, schools their children do not attend, hospitals they do not use, because they can afford private everything, and they structure their wealth to contribute nothing. It means that when politicians talk about raising taxes on the rich, they are talking about raising income taxes, which the rich do not pay because they do not earn income. They earn capital gains, dividends, and offshore returns, all of which are taxed at lower rates or not taxed at all. And it means that the global financial system is fundamentally divided into two worlds. Your world, where income is taxed at the source and there is no escape. And their world, where wealth moves freely across borders, hides in shell companies, and grows completely tax-free. The next time you hear about a billionaire pledging to donate their fortune to charity, remember that charitable foundations are also offshore vehicles. The money goes into a Cayman-based foundation. It is no longer taxable. And the billionaire controls how it is spent. They get credit for philanthropy. But they never actually lost control of the capital. This is the system. And it is not broken. It is working exactly as designed. The only question is whether you see it. Here's what I need you to do. Go to the comments right now. Do you think the offshore tax system is a necessary part of global commerce that keeps capital markets functioning? Or do you think it is a legal scam that lets the ultra-rich avoid paying their share while working people carry the burden? Write one word: necessity or robbery. Let me know where you stand. And if this video changed how you see the tax system, share it with someone who still thinks everyone plays by the same rules.